Yeah, okay guys, hey Stenz, welcome back to my YouTube channel, and today we're going to be discussing on trading reversal using Fibonacci and market structure. So here is an example of what I'm talking about. A market breaking down from downside, and we look for it to retrace back up to our Fibonacci area above the 50%, which is the premium, and then we look for a POI and wait for price to tap in. Then we take our sell from our lower time frame confirmation entry, which can lead to a break of structure in that same lower time frame. Then we take our entry using the same smaller POI from there, and our stop will be above the high which broke structure or above the fair value gap if it's on the 1 hour. So that's pretty much an explanation of it, and pretty much I'm going to show you some example from live charts. So you see, so this is live chart right now. Let me show you the structure. Market was bearish here, creating higher lows, higher lows and higher high. Then all of a sudden broke this low. It's fair to expect it. It's created lower lows, a lower high, and then again it created a lower low there. See the lower low there? Yeah. There it created a lower low, then created a lower high, and then a lower low. That's what it's pretty much doing. That's just explaining market structure to you. You need to understand market structure if you want to trade this kind of pattern. You see how market changed from bullish sentiment to bearish in just a matter of time. Mind you, this is a 1 hour time frame. So, and I don't take trades from the 1 hour. Yeah, if I see entry in 1 hour, I just take it. I don't go to smaller time frame. So from this zone here, as you can see, we are marked out with a orange cycle, showing that as soon as market break that low and close below it, I will aim take my Fibonacci out and wait for price to go above the 50%. And once price goes there, I will look for POI above there. And as you can see there is a fair value gap. Yeah, there is a fair value gap here, and there is another block, as you can see. So, and it pretty much aligned with that is the breakout block as well. It's pretty much aligned with the premium area, because price traded back into the premium area. You don't want to be selling from that impulsive that move. You want price to trade back up again to feel inefficiencies left behind, then take you along from that inefficiency. So you can see as price tapped in, our stop will be above the candle which created the fair value gap, like I said. See, then we'll be aiming for the next low or a good one we should see. That's pretty much how I do trade. Yeah, just simple and short. Yeah, you don't need too much stuff. You just need simple, and simplicity is the key. Simple and clean setup. So now this is another example, one of the examples I'm going to show you. So we're going to move to the next example. As you can see, this is clean setup based on how I explained the last example from the first part of this video. So as you can see, this is the implementation of the explanation in charts. As you can see, it all played out here. So you saw price created a lower low, a high, and then a lower low, and it broke that low again, which broke structure. Emphasis on broke structure. Where there is a break of structure, I will always expect price to come back and retrace back inside. So as soon as price broke structure and they created this low, I was expecting price to come back up again, so I can take my sell and sell with the sellers downward. Once you see the seller already selling, you just have to wait for the right moments to join. So then I take my fib out again and I placed it at the right point. You see, market still traded above the 50%. It traded into the premium always wait for price to go into the premium before you take your sales. And once price is in the premium, what next do we look for? We look for a valid POI, a point of interest, an institutional reference point. So if you look to our left side, we could see a fair value gap there, an inefficiency which price hasn't balanced before. Price coming to balance it, so I'll just take and draw it out. Take my entry from the 50% of the fair value gap, and my stop will be above the high of the candle which created the fair value gap. Yes, like I said, that's pretty much it if it's on the 1 hour. But if it's on the 15 minutes, I can just place it above the overall high which broke structure. But this is 1 hour. Is I've backtested it a lot of time, and yeah, it still works. Yes, it may not work for you most of the time because human error may make mistake yourself. So as you can see here, it pretty much clean and it worked out again. Clean and efficient setup. So you see, as price tapped us in, it went straight for that low and broke it. We aimed for a 150 and we're done. That was pretty much it, guys. This is based on it from a bearish sentiment. We also take a look at a bullish sentiment so you guys can see that it works in both conditions, not just on the bearish market but also on the bullish market. You can also use this same entry pattern for reversal as well, or continuation of trend. Yeah, you can call it that, but I hope you can get what I'm saying now. So whenever you see a break of market structure, you have to wait for price to retrace back, or once you see an impulsive move, don't just rush in. Wait for markets to retrace back, then you take your entry. So here you can see market creating a higher high and a higher low. So as far as break structure there, we expect the price to push back in again. So price break structure, we expect price to push back in, then we can take our sell from there. I'll buy from there and buy it all the way up. So then if I want to take our buy, then I saw that market break structure, then I take my Fibonacci, Fibonacci to mark out the premium and discount. And once now is a buy setup, right? It's a bullish setup. So I want to be taking my buys from the discount and no longer from the premium, which is that of a sell. So now it's from the discount. So I'll take my fib and I want to be buying below the 50%. As you can see, price reached out below the 50% before it started buying. And once price got below 50%, I want to be looking for a valid POI to align my confluences that I have. If I take down, I choice, and you can see my valid POI. See how clean it is. I stretched it out, take my entry from there. My stop will be above the high which created the fair value gap. Like I always say, I marked it out again. I drew it. Just aim for my 1/3 or above the high which broke structure. So the low which was formed before the reversal into the discount or the premium zone. So as you can see, the market pretty much took out the high. That would have just been it. So that's just it, guys. Hope this was helpful and hope you learn a lot from this. I will be bringing pretty much more example, so you guys can see that it did the work each and every aspect of the market. You can use this in a trending market, not in a consolidating market. Note, you don't use this in a consolidating market, only in a trending market. That way you can get the best out of it. So guys, as you can see, markets, another example for you to see, when market is trending, you have to wait for market to pull back so you can sell from the retracement. If you go above the 50%, if you sell, and if it's buying, it should be below the 50%. Thereby you want to buy when you're on discount and sell at premium. That's pretty much how it's been done. So, and when you get the price move into your premium, you have to be looking for some POI to take your entry, and then so you can sell it down. And when it moves into your discount, you look for some POI again to take your entry, so you can buy it up with a reasonable target as well. You can be aiming for the low which price retrace from, or you can aim for your fixed profit, which is 1 2 or 1 3, or whatever you're aiming for. But just be realistic with your aim. Okay, don't be too greedy with it. Peace and love, guys. Thank you for your support.